Hey everyone, it's Evan from the Trade Risk. Tuesday, March 10th here with market analysis, a video, and some trade ideas going forward. I got a lot of names to go through, so let's jump right in. Now the Bears really drove it home today. We gapped down below the previous 2-day lows, and we basically just sank lower, trended lower for most of the day. We tried to stabilize in the afternoon, and then we just rolled over into the close. Now, you can see here, looking at this daily time frame chart, Friday was the real day to take notice, in my opinion. That was the very potent day where we convincingly broke support, which was 209. It held up here. It was the top end of this range, and then it acted as support here for some time. Actually tested it, just this long tail here on Wednesday, and then Friday convincingly broke below that. So that was the time to really switch gears and to get either lighter, more cautious, put on a hedge, depending on your strategy. Yesterday we had a bounce, but it was a real weak bounce. The breadth wasn't there. You could see the indices, were up, but not a lot of conviction. And today, anybody that tried to take some longs yesterday or covered up their shorts early, you could see what happened based on today's candlestick. So, the picture here is, while this, if you're looking at this last leg up from 197 to 212, that would be your last impulse leg to the upside. And, you could potentially say that, okay, looking at something very optimistically, you could say we could potentially be putting in a higher low here. The problem is we're stuck now back in this range. So we have these layers of overhead supply above us, namely 209 is going to be is a big level in my opinion, and we want to get back above that before you could really see another healthy environment. So while this could be a quick shake, it could be a higher low, absolutely. You still need to be a little bit cautious here. Now you're below 206 based on today's close. So getting stuck back in this range that we traded around in for 3 months is not something that you want to see. If you're a bull, you really are getting the picture that this could potentially be a false breakout. And I'm not trying to be Mr. Gloom. I'm just calling it as I see it here. And I think it's a time to be cautious. I think, sure, looking at some different indicators, we are oversold on a handful of metrics based on after today's session. So a bounce is, certainly possible, as it always sort of is plausible when you're in some downtrending action. But we'll have to see what we got. I actually do. I have a light long exposure. I hadn't had any positions on since afternoon on Friday. Lucky enough to come into the day short. Covered that up, and then I did just take a little bit of long on the close here just to see what's going on. Not the index, but some outperforming names. Let's look at the Qs here. Now the Qs a little bit more bullish here. Now, granted, today was a horrible day, and I think it underperformed. It is still outside of this range that it broke out of from February, so it's above 105, and I think a retest of 105 could potentially be a just healthy price action. You don't want to come slamming down into it quite like we see experience today, but if it can catch a bid here above 105, I think this could potentially be something constructive, something that's a higher low. You got to remember that the S&P, this has just a lot of those oil names in there after oil took such a beating, and that tends to weigh it down, even though we'll get into some other sectors that were lagging today as well. Let's kick it to the IWM. Again, retesting this 120 breakout level now. So something, when you a bigger picture view, the IWM and the Qs are holding up much better than the SPY on a relative basis. Now let's look at the treasuries. TLT, look at this nice island reversal gap here. Traded 2 days. We gapped below this 126 support, and we had a pretty bearish bar. Next day we gapped up, traded to the top of it, and then today we had another gap to create this nice little island reversal. So let's see if the bulls can hold on to this onto this gap. I think the lows of today would be pretty interesting, pretty important for them to hold, which could potentially give us a short-term bottom in TLT if that is the case. Now gold, continues to act continues to be pressured, rising dollars, a lot of different factors here, but it's back to essentially the lows of November here at 111. Still tough trade here. This island reversal that we talked about has been in control. Gap, you see another gap here back from Friday, so a lot of damage is going on here, and this chart just needs more time to heal. Silver is a similar camp, 1485. It's basically coming into the lows here that it made back in the end of 2014. Now UNG actually held positive today. It's still bouncing around. I like the action here. I like the sideways kind of consolidation as it figures out what it wants to do. 1360 again. I think this level that it's floating right above is actually really important, and then 1510 on the upside. So it's not ready yet, but we'll keep an eye on that one for a trade in the near future. USO was weak today, down 2.4% on the day, and it's back to the bottom end of this range here. So 1775, 1780, this is where the bulls have sort of been stepping in here, and you can see it's really kind of stubbornly staying weak on the bottom end of this range. So let's see if you get a convincing break below 1750 and maybe retest the lows from back at the end of January. But for now, USO is just kind of hanging out weak today. Let's see if that carries into tomorrow's session. Now, speaking of things that are weak, XLF, I think this actually was the weakest sector of today, the financials. Look at this breakdown right from 2420. It had been holding kind of strong, but you can see it sort of rounded out a little bit of a top gap down today and just closed on the lows. This chart looks in trouble here. Looks like it's in danger of kind of heading back down, retesting some of the lows here from prior beginning of the year. Technology sector, again, another one that was really weak today, down 2% on the day. Healthcare a little bit stronger, still an ugly candle, but outperformed on a slightly relative basis. And the biotechs are continuing to stay strong, still riding above the fast-moving averages. It's still hanging in there, was positive on the day, pushing in the mid-afternoon. So trying to keep things afloat. A lot of names that are acting well, and the price action still looks pretty healthy in a lot of those different names. So that's still where the bulls are kind of congregating and just finding strength and holding up some names. Now, getting into some individual names, Apple had its event yesterday, a lot of volatility. If you look at yesterday's candle, 126 was a pretty important level to hold as support in the near term. We broke it today, closed pretty much at the lows. So, Apple looks like it could still come in some. It's still just digesting. It's had a great run up. It's not too actionable here, but it's doing its thing, trying to digest some recent gains. Google, kind of the same boat, had a really nice run, and then it's this one's just slicing fast. Not a lot of sideways consolidation here. It's moving up fast, and it's coming down fast, frankly. So you can see still kind of in between some of these fast moving averages. It's kind of in no man's land here, 572, 542. There's just a lot of range in here for Google to kind of move pretty quickly through. So it doesn't look too actionable to me there. Netflix, another one. After breaking this support up here at 470, there really hasn't been too much to for Netflix to kind of sink its teeth into and hold on from falling lower. 455 was resistance on the upside. You could see it posted its earnings, but it didn't really hold at all as support. And now you can see we're back challenging the lows here from this range that we put in post its earnings release last quarter. So Netflix is in trouble. It's got room to kind of move around here. It's sort of thin supply in this area, so you want to see the bulls kind of step up here and not give too much of this recent leg back, but that's sort of yet to be seen. Twitter, back to, again, the lows from its earnings, right around $46, closed on the dead lows today. A gap that's still open here, and perhaps it wants to get filled, perhaps it needs to get filled, but we'll have to see if the bulls can reverse this tomorrow and to hold on to this gap for yet another time. I mean, really, this is the second true test of this gap, and I think if the bulls could hold on here, it would really add some significance to this level. But follow through tomorrow could happen fast. If you do see us gap below or start breaking below today's lows tomorrow, I think the action here to fill this gap could happen pretty quickly, because again, there is not a whole lot of supply in there to contend with. Now, Facebook, had a nice run. I took a trade in this, I think on this day here on Wednesday I got long it, and I was quickly stopped out on Friday when we came kind of barreling back down below Thursday's lows and just not holding on to the gains here above $80.50. So since that level, since that kind of false little move here last Wednesday, it's really just kind of snowballed into more of a false breakout, and the bears are still kind of in control here. Again, it's the same story here with Facebook. It's just kind of range bound, a lot of back and forth action. Nothing's very clean here. Breakouts aren't working, and it kind of still tends to be a mean reversion type of play here in Facebook. Buy the lows, sell the highs seems to be working. So again, for me, interest in this again now gets raised up above $81 is when I'd be interested in it. Otherwise, not too exciting for me to play inside of that mess. Amazon, had a nice run up here, very pent up ever since its earning release, just kind of rising in this channel here, and it's breaking down, very clean breakdown from this channel here. It's coming back down, kind of similar to like the Netflix, the Google, all just retracing some of its recent gains now, and we'll have to see where the bulls can step in to hopefully make a higher low if you're bullish in those names. Tesla closed almost flat on the day, just down just slightly, even though it had a nice run with it earlier in the day. This is what you want to see. I mean, this is a very critical level, this 190 area. I got support drawn at 193. Really it's a big crayon. It's this band here, from 190 to 193, I think is pretty significant. Take a look at a weekly chart. You can see what we're looking at. We were down here back in May of 14, came up, and now we're retesting this level. So important for the bulls to hold on, outperform today. Let's see if they can continue to do so. Names that outperformed as well as GoPro, up 2% on the day. Started below yesterday's lows at $37. Buyers quickly stepped in, drove price higher, and you can see they closed pretty strong on the day. So it's very constructive action. Again, it's still a very damaged chart. Moving averages are still all heading down. Downtrend still firmly intact, but this is the type of price action you want to see to carve out some type of bottom. You want to see days of outperformance. You want to see the bulls kind of step in here and kind of confirm that they're interested around this price level, develop a base, and then perhaps work ourselves out of it. So early stages, not interested on my type of trading style, but definitely noting the outperformance today. Alibaba, kind of similar camp here. Support $80 is where we tested the other day. Had this big wide range bar to the upside. A lot of people were excited about it. I didn't want to throw a wet blanket, but I didn't like still buying into this type of bar just because of the downtrend that's intact, the moving averages that are sloping down. I was very wary to kind of jump on board the excitement on this candle. We ultimately traded back down. We traded basically the entire bar, 85% of that bar out, and now you're starting to see some support again by the bulls at these lower $80 levels. So constructive action, not quite there yet for a setup for me, but it's what you want to see going forward. Now, some setups to look at going forward. HABT, HABT. This one had a lot of strength today. I don't know if it was earnings out today actually, but had a lot of strength today. Nice rounded base here. It's tough to chase this wide range bar. Look to see if it can go sideways, if it can tighten up a little bit here and perhaps give you another trigger long entry. But I like the base that it carved out. Let's see what it can do from there. Another one, SABR. This one here is still kind of tight, isn't quite ready. Above $22 would start to really get going. Has some nice outperformance today. I liked it that it was above yesterday's highs. So this one looks good. Needed to see, get a little more traction here, but that one could be an interesting one. MIC. Another one that holding up real well, especially in the past few days, as some of the indices have come down some. Strong uptrend, and I think above $80, this one could start to work. It closed just slightly green on the day, so keep an eye on that one. XLRN, this one I've been talking about for a little while, tagged this kind of resistance level at 41.80. Still not ready, closed slightly red on the day, but you can see it's trying to work itself out of there. Look at a weekly chart, you can see what it's doing here, finding resistance at this $42 level, and but it is kind of trading up against it real nice, like it wants to eventually kind of break through. And finally, QTWO. This one, $20.85. I think is a pretty interesting level on it. A lot of these software plays were pretty hot today. A lot of the the smaller cap software plays, technology plays, had some momentum behind them. I know I think it was Qualcomm with earnings. Perhaps that had some effect on a lot of the space in general. But this one looks pretty actionable. I like it. Pent up here above rising moving averages, pretty tight. $20.85 looks good. A couple of short signals, short setups to have on watch. HCC, this one's kind of breaking down here from this little rectangle of basing that it was doing here for a couple of weeks, below 55.60, basically triggered towards the end of the day. That one looks good for potentially some lower prices to roll over. SHW, Sherwin-Williams, similar camp here, moving averages curling over. It's been kind of grinding along sideways and in a little bit of a sideways base, starting to break down. And finally, LMNX. This one got crushed at the beginning of February, and it's been tightening up and just kind of weekly bear flagging higher. So you can see below 1550, this cluster of lows here could be a pretty interesting short setup in LMNX. So that's it. That's all I have for today. Good luck trading. Volatility is picking up, and it's definitely a time to take notice of the risk, position sizing, so on and so forth. So good luck out there. Thanks for watching, and I'll catch you next time.